Hello, this is the tradesight stocks and futures index preview and roadmap for the week beginning Sunday, March 17th, ending Friday, March 22nd. This is recorded Thursday night. I am on the road Friday, so this is assuming that the market will be fairly flat on Friday for the triple expiration options. That's options, futures, and that's options, futures, indices, and commodities expiring on Friday. Usually the market's fairly flat. We do have a lot of data early, so you may get a spike early, but I'm assuming not much is going to change the character of the market on Friday. If it does, we'll adjust that accordingly on Sunday night. But in the meantime, let's take a look here at what we've got on the S&P daily chart. We did get that second 13 sell signal on the daily chart the other day, and the market has already blown through the risk level. Now, keep in mind, the trigger for a 13 sell signal is to get the signal and then roll over and break the 10 EMA, which is this blue line right here. We are breaking the risk line before that even happened. We have a new 9-bar setup to the upside, which would be a sell signal again. Market seems to be ignoring all of it. So this is a very strong market so far, and until we break that 10 EMA, really not a lot of reason to concentrate on the downside of the market. So we'll see what we get Friday. Of course, triple expiration is often a point where it changes the character of the market. End of quarter is also a point where that happens. So we've got about 2 weeks left in March, and then we go into the next quarter. That can be meaningful. But so far, these sell signals are not turning into actual entry points, and we're just getting a squeeze in the market. Now, I will say we're doing that on very light volume, very poor intraday ranges. The last 2 weeks have been almost untradeable from a futures perspective most of the days, as we're just getting, like today, again, very, very narrow range. And what I mean by that, let me pull this chart over and show you. This is the ES, this is the SP 500 E-mini futures contract. This dashed red line here is anchored to the low of the day. This dashed green line would be the average daily range. So if we traded from here all the way up to the green line, that's what you trade on average in a day over the last 6 months. And you can see barely traded a third of that. That's basically untradeable. We are still sort of using these levels, but overall I would say that's not really a tradable market from the futures perspective. We have had some individual stocks that have worked, but like Google today on the short side and Netflix today on the short side on Thursday. But it's very limited because the volume is so weak. The futures action is just, like I said, basically not what you want to see from a futures trading perspective. So obviously a lot of this has to do with the sequester. We all know that. Whether or not that's going to linger and turn into a downside move for the market, which could be good because it might expand the ranges, or else they'll fix it. And the market's sort of assuming at this point in time they're going to fix it. But it's drifting. It's definitely drifting. We're not getting a solid move in the market. When I look at the NDX Nasdaq side, not really getting a breakout here. And remember, January was one of the flattest months I've ever seen on the Nasdaq. February was pretty flat too, closed right where it opened. We did get a gap up and then some flat action. 2 days down and then some flat action. Little wiggle room late in February. But overall, the Nasdaq side has been very, very flat as well. Just think about this. We opened in January here and we closed in February here. That's the same number essentially. And most of those days there's not a lot of range. It's not like last year where you could probably find two months where we had a couple hundred points of range but still closed about the same point. This has been very, very narrow. So this is something very unusual in the market. Obviously, from a lot of perspectives. We thought last year Forex was flat. In the last 6 months of the year, this is much flatter. So we're just, there's not much you can do. I mean, there are economic factors that affect the market. You need to trade cautiously when there's not a lot of volume and when things aren't making sense. Here's the S&P weekly chart. And again, we had talked about this about 5 weeks ago. We got the sell signal. There's the risk line. And then last week we broke above that. Here we are on Thursday night at least. We've already gotten confirmation of the break of that risk level. So that's pretty much done at this point in time. So, and again, when these risk levels break early, they often lead to big moves. So the market's factoring in some positive things, and those who are looking for the negative move so far have just been missing it. Having said that, we did get a pretty strong bull-bear reading today, way weighted towards the bulls. That's usually a negative for the market. But again, we will analyze all this stuff at tradesight. We will look for certain key signals. Even this one here, we never got the break under the 10 EMA. That's the blue line right here. So we've not had any confirmation of these signals. So we will always look at the information, but we are not here to try to predict. The reality is that you stick with the trend, and every single day you focus on market direction and you focus on market volume. The volume's not there, you trade less size. You follow market direction, you take trades that trigger with that direction, and you keep stops when the market direction flips on you. That's how we handle it at tradesight. and I think that'll keep everybody a lot safer in what is essentially a very unusual market with whatever is going on here. Here is a look at the economic data that's due this week. Monday, NAHB Housing Market Index, not a big deal. That's at 10 a.m. Eastern. That's 30 minutes in the stock market. Tuesday, housing starts and building permits before the bell. Not a big deal. Wednesday, MBA Mortgage Index, crude oil inventories. We have a rate announcement now, the Fed, so if things weren't already slow enough, that'll slow you down for Wednesday. Thursday, initial and continuing jobless claims, existing home sales, Philly Fed, housing index, leading indicators, kind of a big deal. Nothing this week is one of our big three that we look at for the market. We do have that Fed announcement. Nothing on Friday. So I would say the focal point for the week with we're starting a new option cycle. Monday is going to be a little slow by definition. I'll be back Sunday, so I'll be here to trade Monday. But Wednesday with that 2-day Fed announcement, it's probably going to be the focal point of the week, and probably going to be a little slow most of Tuesday, most of Wednesday until that announcement. I would say Thursday is probably your bigger trading opportunity of the week. Fridays, at least it's not an options expiration, but it's still going to be a little slow. So again, we haven't gotten any confirmation. If you stay looking at these indices, again, there's the weekly chart of the S&P, but here's the daily chart, which just completed a 9-bar move up, which is why you're getting a bleep. We do have a big announcement this next week for tradesight for everybody that loves the Seeker and the Comer. We should have it rolled out this week, so be looking for that. But in terms of the market, again, you stay focused on market direction, but we're getting a lot of signals indicating a downward move. We're getting no confirmation of that move yet. Until we get the confirmation, it doesn't really matter. Have a great trading week.